Welcome in our Runoff webinar session. This call or this meeting is being recorded, so most people who could not join us today will benefit from this. Let me start by introducing myself. My name is Sahar Al-Aliwat. I am the Regional Head of Advisory in Braxton Group. Before we dive into the main session, I am honored to introduce our esteemed speaker, Mr. Mohammed Radi. Mohammed brings a wealth of experience in the insurance industry with over 25 years of experience in the field, currently serving as Vice Chairman and Chief Operating Officer at Braxton Group. Mohammed has been instrumental in driving productivity, distribution, customer service, product development, marketing, sales, and financial operation. In addition to his professional accomplishment, Mohammed is a recognized leader and a well-known lecturer and panelist on various topics and important subjects on insurance, and is a regular contributor to several professional and local publications on various topics relating to the insurance and takaful. Today, Mohammed will be sharing insights on runoff, focusing on the runoff market in the GCC and MENA region. We are excited to have his expertise guide us through this session and provide valuable perspectives. Please feel free to log your questions in the chat box as we go, so we can address them in the end of the session. Please join me in welcoming Mr. Mohammed Radi. Over to you, Mohammed.
Thank you very much, Sahar. You gave me a huge liability now to make sure that everybody who is here with me, with us, is happy to have invested his time in this session. And that's the promise that I give, that they will walk out of this session with insightful information about runoff and how to manage runoff properly. It's a pleasure for me to be with you. And I'd like to start by welcoming all of you, whether you're an insurer, a broker, a reinsurer, an insurance professional, or any other service provider to the insurance sector, or a person who has interest in the subject. Welcome to this webinar. And I hope that you gain more info from this webinar than what you had before joining. I will start by mentioning something about the insurance sector. It's a reflection of the economy. When the economy grows, the insurance sector grows. When the economy suffers, the insurance industry gets affected as well. So there are up and down times for the insurance sector and the companies. We and you definitely hear about a lot about insurance companies launching new products, expanding to new markets, making new deals, and using technology and so on, growing their talent and staff and so on. But when it comes to difficult times and they want to change strategies or exit certain lines of business which are not performing well and so on, we don't hear about it in the news a lot. Maybe from our side as Braxton, because we are a service provider, we hear more about these than you possibly, but this is something that is happening in the market. How it is happening, that's what I want to share with you. And I would like to focus on something that a proper approach for runoff management can make the difference between preserving value for an insurer and suffering both financially and from reputational setbacks. So that's how important approaching this subject is. Let me start by sharing my screen with you and walking you through the presentation that I have prepared. And I hope that we walk out from this session with good value. And I also want to hear from you through your questions, your reflections, and your feedback as well on this. Please let me know if you can all see my screen.
I think we can, yes.
Okay, good. So the title, I named it as Runoff, is a strategic move or a corporate escape plan, because mostly people confuse a runoff always with failure. It's not always the case. Sometimes companies decide to run off certain lines of businesses that they write, or exit certain markets because there is a change in their strategy, or they see something different than what they see it in the future, and they want to adjust, and they want to be ready, and they see an opportunity in the future, and they want to exit certain lines and focus on other lines of business. Okay. Let me also start by defining runoff in general terms, in easy terms. Runoff refers to the management of insurance policies and liabilities, which are claims, after an insurance ceases to underwrite or issue new policies, either in specific lines or decide to exit the market completely. That's a simple definition of runoff. It involves a lot of things to be done while the company is in the runoff phase, but that's the simplest definition that I can say. In terms of the importance to the insurance sector, the effective management of runoff ensures the capital preservation, ensures that you get it done in compliance with regulatory requirements, and the operation during the runoff is also stable. You are able to provide the quality of customer service that you should, and not suffer from any reputational risks or have angry customers and have more litigation in the court because of that. Because the change in mindset internally within the insurer or externally from the customer side, from other third parties who deal with the company, when a runoff is announced, creates a lot of issues and litigations and problems. How to manage that is going to be helpful to you, preserve your reputation, and make sure that you do things organized, following a strategy, and in compliance with regulations. Let's see now the size of the MENA insurance market. You can see that it's growing from below 35 billion in 23 to reach over 48 billion in 2028. Okay, that's a market which is growing. And what you can see also from this chart is that the life portion is very little. And we always see that across our market in the GCC, that the life insurance penetration is very low. There are certain factors about this, and I'm not going to go into them, but there is a huge potential for the life business to grow. It needs a lot in terms of awareness, in terms of regulations, in terms of innovation, and for products and so on. But that's a subject different from our subject today. I don't know, for some reason. Yeah, okay. The key markets are Saudi and UAE. They are the biggest market in this region. And then other markets like Bahrain, Oman, Egypt are also pivotal players in the region. The market size, as I said, is growing and will continue to grow from the indicators, economic indicators that we see. And insurance is going to be demanded more and more with the changes that are happening in the customers' minds and the needs. The change in regulations, laws, and so on will increase the demand for insurance. And also, the changes in the regulatory landscape, regulators now in the GCC have taken an active role, most of them, and some countries where there was almost no proper regulation have changed now, and they're going to more stringent regulations, requesting insurance companies to protect the policyholders' right to have the right resources, right capital, right solvency margins, and so on. So that change is going to drive the market growth as well. We've seen the market size. Now, what about the part that you don't see? Okay, what is the size of the runoff reserves? Runoff reserves is for all companies that are under runoffs or portfolios that are under runoffs or portfolios because of M&A, mergers and acquisitions, now are placed in runoff. And you can see this is from PwC's report. It is around 14 billion in our market. That's a big figure compared to the size of the market, but that's the reality. Companies, when they shift direction, place certain lines of business into runoff, or because of an acquisition or a merger, decide to exit certain lines or put certain operations in runoff. That is a market on its own, and there are providers of service that manage this, and it's an active and even becomes kind of an investment for certain investors to go into it as well. What drives the runoff in the region? Okay, the first and most important is the regulatory changes that we see. The focus from regulators on enhancing the solvency margins and capital adequacy standards require certain insurers to reassess and optimize their portfolios. Okay, why should I put more money and invest more resources, capital, and so on if I'm not realizing the right return on my investment? Some companies approach it that way. It's not just to be a player in the market. It's for you, your objective as CEOs, GMs, managers, and so on, board members. Your objective is to realize a return on the investment put by the shareholders. If the regulatory changes are not making you able to provide that return on investment, then certain actions are needed. The change also in compliance that will add more cost on the operation. At one time, you're not obliged to have certain functions available in the company, but now with the stringent regulations, more and more functions are becoming mandatory, and you need to get the approval of the regulator on the resources that you bring in, and these resources are expensive. We've seen it in many markets here. That adds up to the cost of operation and diminishes the return on investment. The bottom line grows or goes smaller day by day, unless you take a certain action, either to grow your company and portfolios or decide on an alternative approach. So that's one of the main drivers for the runoffs. The other driver is the economic factors. Volatility, fluctuations, for example, in oil prices impacts the financial stability and prompts insurers and reinsurers to exit certain markets or product lines. Again, if they don't realize the right return on profit on the investment that they have put, they will decide on that. It's not always because that they have suffered losses. They want to prepare their plan for the future. So they take proactive measures to exit certain lines which are not performing well or where they're not realizing the right return on investment. The third one is the strategic portfolio optimization. the days are gone where an insurer has to provide all lines of business. There is no need to do that. There are a very successful company here in our region is providing one line of business, and they're very successful. And many of you know it. It's Bupa in Saudi Arabia. They write medical insurance and focused only on medical insurance, and they have grown. And they are the market leader, and it's difficult to compete with them. They have reached a stage where they have reached a dominance somehow in the medical insurance market in Saudi, and they write only one line. Why, as an insurer, you need to offer all lines of business, when now with the regulations for each line of business, you have to have the right resources, the approved personnel, the approved underwriters, the approved claims managers, and so on for each line of business. Those who are going to be approved usually are well educated, certified, and so on. And in return, they demand a higher pay. That will affect the cost of your operation. And if you're not able to write enough business in all those lines of business that you are offering, why keep these resources? So a need for optimizing the operation and resources may be a driver for deciding on running of certain lines of business and focusing on the core segments only. The market dynamics, the increased competition and market saturation. Although geographically our market is small, but when you go and count the number of insurance players in our markets here in the GCC, it's a very big number. And each one of them gets a small piece of the cake. When I say the cake, it's the market, all of the insurance market premium. They get a smaller piece if there are many competitors. If they consolidate, and we've seen in Saudi, for example, even the regulator is pushing insurance companies to consolidate and merge with each other in order to form a bigger and stronger insurers in the market and reduce the number of competitors. So when that happens and a merger or acquisition happens, there are side effects. There are certain lines that need to be managed and run off, and exiting certain lines of business. That's also a driver for putting certain lines in runoff. I just mentioned mergers and acquisition, and it's happening across all countries here in the GCC, and we anticipate that it is going to grow further, especially in markets like UAE and Kuwait, because of the new regulations and becoming more stringent, the regulators there, and because of the fact there are many insurance players in those markets, and many of them have very small market share. So we see that the consolidation and mergers and acquisitions is going to continue going forward, and that will have basically a market for the runoff service providers, or the need to do it internally if they decide to do it internally as insurance companies. Now, what are the benefits when you decide on going into runoff? What are the benefits, okay, for insurance companies? The first one is the capital optimization. When you exit a certain market and there is a tied up capital to an insurance operation that you were working on, and you're not realizing the right return on that investment, that capital is an investment. And if you're not realizing the right return on that investment, when you exit the market and decide to go into runoff, you will be able to release that capital, release those investments, and you can put them in another investment or in another country and so on, and realize more return. Okay. The second one is risk management. You will be able to mitigate the exposure to adverse selection and legacy liabilities. If you realize that you are exposed to long tail liabilities, and you don't want to continue to be exposed to those. Why continue writing that line of business? Why not decide on exiting that line of business? And there are solutions for dealing with those long tail liabilities. And we as Braxton and others, other providers, can provide you with those solutions, and you continue with your life writing business in profitable lines without exposing yourself to a lot of risk. There is also the operational focus to allow the management to concentrate on profitable lines and strategic areas. As I said, there is no need to write all lines of business. There is no need to compete on each and every product. Focus on what you excel in best. Focus on what will get you a good return on your investment. Focus on what will make you stronger rather than just it's a one shop offering all products. Those days are gone. You need a strategy now and you need to implement that strategy. And if the strategy says that you need to exit certain lines of business or exit certain markets, then you do that. Shareholders, board members, and so on need to realize those strategies. And also, if it's a listed company, the shareholders will have a voice, and in the AGMs, they will raise their voice why the performance is not as expected and changes needed and so on. And board members, executives, and so on need to have the right answers for that. If the right decision to take is to go into runoff of certain lines of business or exit certain countries, then you go ahead with that. The regulatory compliance part, okay, you need to ensure adherence to evolving regulatory standards and solvency requirements. And when I go in other slides to show you country by country what regulators are focusing on, you will see certain common factors and those focuses by regulators. And when you decide to run off certain operations, you want, in certain cases, you want to make sure that you adhere to the requirements of the regulator. You don't want to be in breach of any of those requirements. And sometimes the right decision to do is to exit certain lines of business so you don't expose yourself to problems with the regulator who is asking for something, but you are unable to provide it. So when you stop that line of business, the demand from the regulator on that part is not there anymore. Now I'll touch on the challenges in managing runoffs in the MENA region. Okay, there are operational hurdles, and that's because of limited expertise and resources dedicated to runoff management. In Braxton, we're proud to have had the experience in managing runoffs. We managed more than 6 runoffs between complete company runoffs or exiting certain lines of businesses across the GCC. But there aren't many companies like Braxton here operating. Some companies decide to do it themselves internally as insurers. And because of the lack of expertise in managing a company in a phase of runoff, they face certain challenges. And then the other factor is the complexity in administering long tail claims and legacy systems. The systems of insurance companies, when they are in runoff, they will not be updated. I'm talking about the IT systems. So they will be old systems, and also the long tail claims related to liabilities, those claims which are in court, those claims which are going to come after some time, how to deal with them, how to close them, how to reach a settlement, and so on. That's a challenge that companies need to focus on. Then when it comes to regulatory compliance, it's also a challenge, because let's say you are a branch of a foreign company operating in one of the GCC countries. At least you will need to deal with 2 regulators when you go into runoff. You need to deal with the regulator of the country you are operating in, and the regulator where the parent company is licensed. So you need to be aware of the requirements in these 2 jurisdictions. What are the regulatory requirements in the country within the GCC? What are the regulatory requirements in the home country? And you need to be able to meet all of those requirements. So that's also a challenge for companies when they decide on going into runoff. And here I'll bring something that we learned because of our experience and as Braxton. We thought that running off a branch is going to be an easier job than running off a full insurance company. And it turned out to be no, the opposite was running off a local insurance company is easier than running off a branch of a foreign company. That we learned it from experience, and mainly because of the need for dealing with more than one regulator when you are a branch, the need to get more approvals from different jurisdictions on a lot of documentations and so on. The need to get all of those approvals takes longer time and adds on the operational complexity of the runoff management. And that was for the branches. Whereas for locally incorporated companies, it's an easier thing. Another thing is when you compare the runoff of a conventional insurer with a takaful operator or a takaful insurer. With a takaful operator or a takaful insurer, it's more complex compared to the conventional insurer. Because, for example, you have to deal with 2 parties. You need to satisfy the regulatory requirements and also satisfy the Sharia requirements when it's a takaful operator. And that's going to put more investment in time, operations, and that will make the runoff more complex than if it's a conventional insurer. When you want to, as part of the runoff process, want to sell or transfer the portfolio of a takaful operator, you need to find the right buyer, another takaful operator or a reinsurer, okay, for the Sharia board to approve the transaction, or get another approval from them if you are unable to have that. That will be part of the complexity and the challenge that you are going to face if it's a runoff of a takaful operation. That's something that we learned from the projects we worked on, the runoffs that we have managed. We were under a different assumption, but these facts came and we faced it. Alhamdulillah, we have succeeded in doing all of those and managing these types of runoffs. Then the third challenge, I'm highlighting only those which are important. I'm sure there are other challenges, but I'm highlighting and focusing on those that are important. The financial constraints. There will always be potential strain on capital, and it's because of prolonged claim settlements and reserve requirements. When you are in runoff, be it a full runoff of an insurer or a certain line of business, it means that you're not getting any income and you have certain capital and assets, and you need to utilize them properly to manage the claims and pay the claims and keep your customers happy so that you avoid reputational risks and litigation. And you have an obligation as well to make sure that the cost of the runoff in terms of operation is the least, okay? So that will put you in a certain difficult situation managing the financials. You need to reserve as much as you can from the assets and capital, reduce the cost of the operation while in runoff, but at the same time, you need to satisfy a lot of other parties, the claimants, the customers, the regulators, and so on. Certain functions are mandated to be present. The regulator will say, you need to continue having compliance officers or managers. You need to continue having finance managers. You need to continue having claims managers, underwriters, and so on. Although there are very little number of policies that will be in terms of underwriting that need an intervention of an underwriter, just maybe for extensions and so on. But certain regulators say, as long as you are licensed, you need to keep those core functions available. And paying for those resources is going to affect the financials. It will put a strain on the capital. It will increase the cost of the operation during the runoff. Okay. Now, I'm going to go through kind of regulators in each country of the GCC, and then you will see what is the common factor between all of them. What do they want to achieve as regulators, and what are they focusing on? Okay. In Saudi, it's the insurance authority, and their aim is to strengthen regulatory oversight and corporate governance within the insurance sector. And we see them actively doing that, and we respect them for that. I have seen a huge change in Saudi from prior to 2005 to now. Prior to that date, there were hardly any regulations for the insurance sector. Most of the companies operating in Saudi were not licensed from Saudi back then. Many of them were licensed from Bahrain and were working in the Saudi jurisdiction, and we called them offshore licensed companies. When the new regulation came into Saudi, they had to change and they had to get licensed in Saudi, and many of them had to withdraw from the Saudi market. So that's part of the runoff wave that happened when new regulations have been introduced in Saudi. New companies were formed, and the companies which were operating over there had to exit the market because they're not legal anymore, and they need, although they were requested to exit, but they were supposed to honor their promises to their customers. They need to continue the coverage for their insurers to make sure that the claims are paid and so on before they liquidate. They are at the end licensed as well from Bahrain, and the central bank cares for these things. They want to make sure that the runoff is done properly under the supervision of the regulator, which is the Central Bank of Bahrain, although the company was only operating in Saudi. So the message from me is a big change has happened in Saudi prior to 2005 and now. Saudi now, in terms of regulations, is the leader in the GCC in terms of insurance regulations. But that comes as well also with a cost to insurance operators over there, and they need to adjust, they need to build up their strategies, and sometimes some of them may opt for runoff to comply with these enhanced standards and to mitigate the complexities and risks that they have. Okay. When you go to the UAE, a change happened in the past 3 years, which is moving the insurance authority to the central bank. And we see that in the past 1.5 years, the central bank has given the insurance sector their attention, and they're making changes and focusing on having higher solvency margins and stronger capital for the insurance players in the UAE. I'll share more details with you on this in other slides, but the focus from the Central Bank of UAE now is on stricter capital requirements, and to that has prompted insurers to place those lines which are underperforming into runoff so that they optimize the capital allocation. In Bahrain, it's one of the oldest regulated countries here in the GCC, in the insurance sector and banking sector and so on. They had the experience, I would say, as a regulator with runoffs more than the other regulators in the GCC, and that was partly driven by the runoffs of the companies which were operating in Saudi and they were licensed from Bahrain, plus other runoffs of direct and reinsurance companies that were operating in Bahrain, and many of reinsurers which were licensed from Bahrain who decided to exit and leave the operation. The central bank was dealing with them and supervising the runoff. So they have a good experience when it comes to running off direct and reinsurance companies. They have in Bahrain also a very good takaful regulatory framework, aligning with international standards. They also have licenses for runoff providers or insurance management services providers, which is unique in the GCC. Other regulators, they don't have that type of license for providers of services to manage the complete runoff of an insurance company. So those providers need or resort to alternative solutions to get that done. When you go to Oman, also a change is happening in the market in Oman. And the CMA, the Capital Market Authority now, is overseeing the insurance sector and regulations, and their focus is on market stability and policyholder protection, which is common for all other regulators as well. The objective of all regulators is to protect the interests and rights of the policyholders. Okay. The focus in the Omani market regulators is on the solvency and capital compliance. Okay, the operators there need to comply with the minimum capital requirements. There's a waiver for e-insurance and data protection. And also when it comes to the health insurance, the regulator issued regulations requesting insurance companies operating in Oman to retain at least 40% of premiums locally. So if they don't have the right capital and solvency, that will be difficult. And some companies may say, I don't want to write medical insurance because it's putting a strain on my capital and solvency. Those companies who were willing to just issue the medical insurance and rely on support of reinsurers, now with this requirement of keeping 40% within the Omani market, within the insurance company, may make it difficult for certain companies, so they may resort to stopping that line of business. In Egypt, and as per my understanding as well, it's in Bahrain, the financial regulatory authority there, they govern the insurance sector. And the point I want to focus on is they have introduced a risk-based capital. The more business you write, the higher capital that you have to put. And the solvency will need to be adjusted accordingly. And there are other factors affecting that. If you have a lot of receivables, the aging of those receivables will play an important part in calculating the solvency margins and so on. That means that when you grow as an insurer, your capital requirements goes higher. You cannot grow the operation and keep the same capital that you started with, let's say about 5 million Bahraini dinars, or in UAE, 100 million dirhams. You need to grow that capital as long when you grow your operation and size of business. So that's an important thing, and some companies are not able to meet that, and they need to take certain actions. And part of those actions are deciding to exiting those lines which are not performing well. So they realize the right return on the business that they write. Okay. Now, this slide is mainly about the UAE market, what happened last year. Okay. The central bank issued regulations, and those regulations affected insurance brokers and foreign insurers or branches of foreign insurance companies operating in UAE. The regulator demanded that brokers provide a bank guarantee of 3 million dirhams for the head office and additional 1 million dirham for each branch of any broker operating in the UAE. Certain brokers who are unable to meet that, or their business is small, and if they provide that guarantee, means that they're unable to finance the debt if they will get finance, or basically they're looking up cash and they're not realizing good return on it, will decide to close down and exit the market. And the same applies to branches of foreign companies. And when we say foreign companies, in terms of interpretation, any branch in the UAE owned by a company outside the UAE. Doesn't mean foreign means European and so on. No. If the branch is, let's say, of a company located or licensed from Bahrain and they have a branch in UAE, or a company licensed from Egypt and they have a branch in UAE, and so on, or from Oman and they have a branch in UAE. In that case, the central bank told them in this regulation that you need to provide a bank guarantee of a minimum of 100 million dirhams for you if you are a direct insurer, and 250 million if you are a reinsurer as a branch. Now, you go to the insurance market in UAE and make a study. Branches of foreign companies, not all of them write more than these amounts. Some of them write in terms of premium, annual premium, below these amounts. Why should they look up capital or cash as a guarantee in a bank just to meet these requirements? They need to take certain actions. Some of them that we dealt with have decided either to grow their market share so that it becomes feasible, and some of them are thinking of exiting the market, and that's driven by the change in regulations. I understand why the Central Bank of UAE has gone for this. They want the insurance players in the UAE to be stronger. They want to protect the rights and interests of the policyholders. They want to reduce the number of competitors. And we've seen this happening in Saudi. And this is a good decision from a regulatory perspective and from a macro perspective when you look at the market. But certain players in the market gets affected and they need to take an action. Some of them need to exit. Some of them want to grow and they see the potential in the UAE market going forward, and they don't want to leave and they want to stay. They want to invest and they know that they are going to get bigger and realize more returns on their investment. So that's an important thing that they need to study and then make a decision, the right decision about it. Okay. The strategies for effective runoff management. Okay, I put them in summary in this slide and the slide to come. The main and very sensitive part is the effective communication. The transparency in communication with stakeholders is very crucial during the runoff process. Okay, because a wrong message delivered to any of the stakeholders will cause problems during the runoff phase. You need to be transparent with the regulator. inform them in advance of the strategy that you have taken, if it's about exiting a certain line of business or exiting the jurisdiction itself. You need to provide them with all the assurances that you are going to do this properly, focusing on protecting the rights of the policyholders, that you are going to honor all the obligations, all claims that are going to come to you, and you will provide all the financial resources that are needed for that, and to make sure that the regulator is on your side. They're convinced, they see the facts, not just promises, and that will help you in making sure that the relationship with the regulator is smooth. You do your plan, which has been approved by the regulator, and you implement it without issues. The communication with the policyholders is also important. Imagine yourself operating now, and then the news goes out that XYZ company are exiting the market. What will happen is policyholders will get worried, service providers will get worried, and other insurance companies that deal with you will get worried, and each of them will jump immediately. They want to claim their money from you. Okay, so how to communicate that message to the market and to the stakeholders is very, very important and need to be managed carefully, or else it will have or it will create issues for you and make it difficult for you to manage the runoff, whether you decide to do it on your own or have a third party expert to assist you, like us or other parties. The regulatory compliance is also an important thing, and to have a runoff done properly, smoothly, you need to make sure that you adhere to local regulations, and this will ensure a smooth runoff. When you try to kind of cut corners when it comes to regulations, that will affect you. You will not get the support of the regulator, and certain things will get delayed. The cost will be higher. So why do that? Just follow the regulations. Everything that is there in the regulations about the requirements for the company under runoff or for a line of business which is under runoff, you need to make sure that you comply with it so that you don't have issues, and you focus on delivering the service to your customers, honoring your claims, making sure that your financials are prepared, you have a good solvency margin, you're healthy, and you can continue with the execution of the runoff. In terms of the operation of the runoff, as I said earlier, you don't have further income coming in. So you have the fund, the capital, and the assets that you have, and you need to manage that efficiently from a financial perspective, and at the same time, not to go below in terms of your customer service. Okay, you need to keep your customers happy. You need to keep the claimants happy, and so that your reputation will not be affected, especially if you are an investor in one of these GCC countries and you have a branch and you have other continuing operations in other GCC countries or in your home country. Why gain bad reputations because of a portfolio that you decided to run off? And that was driven by bad customer service. No, the best approach is to provide the right customer service, to cooperate with your policyholders and claimants, to cooperate with other providers of services like loss adjusters, lawyers, and so on, make them do their work and pay them on time, to cooperate with other insurance companies for recoveries, settle your dues, and collect your money, and so on, as if you are continuing in the operation. That will protect your reputation, will reduce your cost during the runoff, and will achieve the objective of optimizing the capital and releasing the capital at the end. Now, how to go about it when you decide on runoff, okay? I'm sharing here not so much. If any of you is interested in discussing this further and so on, we can share more info. But the options available are either you internally manage this, but then you need to have the right resources and in-house expertise dedicated to handle the runoff of operations, whether completely or partially for certain lines. Okay. Another solution is to outsource this or seek help from companies who can provide this as a service. And we are proud as Braxton to be the only company which has managed this number of runoffs. We managed almost over 6 runoffs. 3 of them are entire operations of entire companies. And those companies were owned by AIG, the biggest insurer at that time worldwide. One of them is a takaful operation, which is Chartis Takaful Inaya, and one of them is a foreign company or an offshore company licensed from Bahrain operating in Saudi, which is Arabian American insurance company. And one is a reinsurance operation, a branch of New Hampshire Insurance Company. That branch was licensed in Bahrain by writing business from the whole MENA region. That has given us huge experience, and we understood a lot when it comes to runoff management, and we were able to provide an excellent service to our customers, the AIG at that time, and we got a recognition from them that the work we have done was the least expensive and the fastest in terms of completion was the fastest in their history. And AIG is a company whose history is more than 100 years old. Also, we have done portfolio runoffs for companies in the GCC successfully. And we have a project now, we cannot announce it, and most of the work that we do for runoffs, we don't usually go public with it, but we have a project as well to run off an operation of an insurance company in one of the GCC countries. There are other competitors with us, but none of them, I can say, has the same experience as we do in managing this. So one option for you as insurers, reinsurers, and so on, when you decide on putting your operation into runoff, is to outsource that or seek the help from companies like Braxton. A third option is to, and partly, and this is something also we do, to transfer the portfolio or sell it to another operator or insurer or a reinsurer, and then you are able to exit and free up the capital. The technology definitely plays an important role, just like in an ongoing operation of an insurance company. It also helps when you go into runoff. The data analytics will get you a clearer idea of what you expect in terms of claims that are going to come. The automation will help you in reducing the cost and digitizing the service through platforms and so on. All of those are important for you in the runoff. It doesn't mean that you stop using technology because the operation or the portfolio is under runoff. No, it's good to keep that and provide it, again, as I said, to keep and preserve your reputation and also to lower the cost of the phase of runoff. Okay. Now, the future outlook for runoffs in the MENA, I'll summarize this slide. We expect the demand or the activity for runoffs to increase, driven by regulations, driven by the high competition in the market, and driven by the big number of players in the market. That's in summary what we see. The trends are saying that runoffs are going to increase, mergers and acquisitions are going to increase, and that will initiate or necessitate the need for runoffs. and the stringent regulations from regulators across the GCC and MENA are going to be the driver for companies to change their strategies. And part of those strategies is to decide to exit certain lines or certain markets, and that will be a driver for runoffs in the region here. The recommendations, and I think this is the slide before last, for insurance companies is to approach runoff as a strategy. It's not an escape plan, as we said earlier. Your strategy changes with time and with the economy and so on. When something is not satisfying your strategy or getting you what you want, why continue doing it? If a certain line is not really performing, or you are unable to grow in a certain market, or you suffer from other constraints and so on, why continue? You can exit. It doesn't mean that you failed the decision to exit because you have a different strategy now than you had 5 or 10 or 15 years ago. Okay. And the other suggestion is to engage in a proactive communication with regulators and stakeholders so that the runoff will be done or executed without hassles, without problems, and your reputation will be protected. Your customers would be happy that you did not let them down because you decided to exit a line of business or the market. For regulators to develop, our recommendations is to develop clear guidelines and frameworks for runoff operations. Because when you go and check the regulations, it's not clear sometimes, or there are no licensed service providers approved by those regulators, or there are no licenses for such operations or runoff management. And I think this is something that need to be there, and regulators need to pay attention to this. And to encourage transparency and best practices within the industry, that's something which is important, and I'm sure they're working on this, and we see that in their ever evolving regulations. Okay. I'll leave you with this QR code to fill in, and I would really appreciate if you fill in the feedback form so that we know, we get your feedback, we know what to improve on in our future webinars and sessions and so on. It will be happy to hear from you. I'll leave it on screen. I'll hand over to you, Sahar, and to you as well, the audience, for questions. I'll be happy to answer them.
Thank you. Thank you very much, Mohammed. That was really insightful, and I think it's a rich material. So really, you covered it very well. Thank you very much. While we have the feedback form on the screen, I have few questions, if we can run through them quickly. The first question I got for you, Mohammed, is do you believe the adaptation of IFRS 17 has also contributed to this substantial portion of runoff portfolios in the GCC?
Okay, that's a good question. Partially, yes, but it's not a big change, in my opinion. Companies, when that standard was introduced, they were not really understanding it clearly, but the picture got clearer. And now what they do, or kind of the hurdle financially on their shoulders, is on managing the additional cost that they need to incur to adapt and issue their financials based on IFRS 17. It has put more cost on them. But day by day, they understand why that standard has been introduced. I haven't seen a company changing direction or deciding to exit the market mainly because of IFRS 17. It's one of the factors that increase the cost of operation, and investors pay attention to this when they want to realize a certain percentage of return on their investment, on their capital, and so on. that would be one of the factors, but it's not the main driver for an action to go into runoff.
Thank you, Mohammed. I got one more question. How does technological innovation play a role in runoff management?
Okay, that's an open-ended question.
Let's see how
Okay.
best you can address it.
Yes. Technology is in everything we do in life. And as I mentioned in the slide, I have shown about the role of technology. Just like it is important to a company which is continuing and growing and so on, to utilize technology for many factors. One of them is cost optimization. Others is to keep up with the demand of the customers. Customers now want to buy things online, want to submit their claims online, want to get them done faster and quicker, okay? And this is why companies are investing in technology and providing it. But what happens if they go into runoff? They need to still continue offering the same level of service to customers to protect their reputation. And also, technology will help them in reducing the cost of the operation during the runoff, which is important to preserve the capital and reduce the cost. And then they will be able to free up more capital than if they don't use the technology. So that's important for it. When you go to the other side, we, as a service provider, we use technology and will continue to rely on technology in managing runoffs on behalf of our clients because it will help us get a clearer picture of what's going on, will help us in take strategic decisions, advising our clients of the right approach and decisions to take at each and every step of the runoff, and help us do a better job. So it's essential to use technology.
Excellent. Thanks, Mohammed. I got one more question from the audience. What are the critical steps to consider when drafting a runoff or exit plan?
The critical. I think I touched based on that during the slides. And I said, first, you need to control the message. So you need to have the regulator with you on your side. You have to have transparency with them on what you intend to do and how you will do it, and the assurances to keep them happy. They know that you're serious about what you want to do. You're serious about protecting the rights of the policyholders. You are honoring or all the claims that will come your way. You will meet all of your obligations to other insurance companies, reinsurers, service providers, and so on. That's important. Another is on how you go about it, whether you do it in-house, you do it as an outsource or utilizing outsource providers or advisors. It's also important. And then the cost of doing the management of the runoff. That's also important for you.
Thank you, Mohammed. If I would only add one point, which is always dear to my heart, is engage with the regulators as soon as possible in the process and be transparent as much as you could, so you get their buy-in from the early beginning. I think I have one last question for you, Mohammed. It seems that people were enjoying the session, which is good.
Can I the QR code, can I just take it out and go to the screen?
Yes, okay. I believe you can.
Okay.
So the last question, Mohammed, for you today, what is the future of runoff in the MENA region? That's a good one.
Yeah, we expect the need to grow. And the drivers, I have touched on them. It's regulations, competition, too many players in small markets. So that will trigger actions. It will start with M&As, mergers and acquisitions, and that will also affect the demand or I will not say demand, the need for putting certain operations in runoff. So we expect it to grow. And by the way, something I did not touch on. I don't know how many of you have heard about the asbestosis issues and problems and disease. It's something that has started back in the late 70s, beginning of the 80s. And insurance companies had to pay huge sums of claims to people who were affected. And certain trusts have been formed and change in how insurance policies are issued, a change from claims made, risk or loss occurring basis to a claims made basis in the policies of liability and so on has happened. And to my surprise, it is still there as a big portion of the reserves for runoffs. There are companies operating those trusts and portfolios, paying claimants because the disease will be detected after many years, and those who are affected need to claim, and regulators in the US and other countries have managed this carefully, and there are fund managers who are paying those. So runoff is not something temporary that will be needed. As long as the insurance industry is there, the need for runoff will continue to be there because strategies change, regulations change, and companies need to do something about that. And part of it is going to be deciding to put a certain line of business into runoff or a complete operation into runoff.
Thank you, Mohammed. Thank you very much for our audience today. We really appreciate your attendance, and we will really also appreciate if you could fill in the feedback form. We will also be circulating it to you guys by email, so you get the link with you. Mohammed, thank you very much. That was really, really insightful. And if anyone have any questions for Mohammed, feel free to reach out to us through email, and we will be happy to answer your questions even after this seminar or this webinar. Mohammed, any final words from you?
Okay. I would like to thank everybody who have attended, who have taken the time to attend this session. Thank them for attending and for the interest in the subject itself as well. I would like to say that we will be happy again to provide more details for those parties, those people who are interested in getting more info about runoffs. We can share more details with them. We can help them if they are thinking of approaching a decision that may result in running off a certain operation or a line of business and so on. We'll be happy to support them with that as well. And our doors are open. I welcome even criticism and ideas that will be good.
Absolutely.
Yeah.
Thank you very much, everyone. Wish you a lovely day. مع السلامة.
Thank you.
مع السلامة، يعطيكم العافية.
مع السلامة. Thank you very much.
Thanks a lot. صحة.
شكرا.
شكرا. حياكم الله، ما قصرتوا.